think there's a huge amount of opportunity in markets at the moment, and I think what we've seen is a pickup of that rotation that we started to see in early July when we had that lower CPI print come out of the US. I mean, the markets have clearly been focused on the election this week, budget in the UK last week. All the while beneath the surface, we've seen credit spreads track tighter. The environment for corporates is improving, continues to improve. We've seen that come through in earnings as well, particularly in the financials in the US, the banks in the UK, painting an improving picture of the consumer that we're starting to see in some of the growth data and some of the spending data in the US as well. So I think for our clients' perspective, people wanting to invest into markets, what we've seen, and we saw it a little bit last night with the Fed BOE yesterday afternoon as well, rate cuts coming maybe not quite as quickly and quite as fast as previously anticipated, with a push up in some of the spending.
What are people rotating into and out of?
We think we're seeing rotations out of some of the big tech names, which has been quite a defensive holding within portfolios, into some of the more cyclical names, more high beta names, so parts of consumer discretionary, parts of financials, and also more cyclical markets. And we've spoken about the UK just earlier with the market. I mean, that's a market that's paused a little bit in the run-up to the budget. We think with some of the earnings that we've seen come through in that market, particularly in the banking sector, that's one to pick up.
6-month view of can you get a 6-month FTSE up? I don't know if the team can do that for me while I'm asking the question, because we've had stability in the election, very, very clear election result. We've had a very clear mandate for Labour, and Rachel Reeves has pretty much done what she said she would do, albeit perhaps some people were surprised by the level of debt that's going to be raised to pay for spending. So you've got more spending, more capital allocation, more stable environment, pounds looking fairly solid around the 129, 130 mark. Why is the stock market doing this? This is a 3-month chart. We'll get a 6-month coming. But my point being, Rory, that's great. That's exactly the chart I wanted. So before the election, even though we were expecting a Labour government, we were trading around 8,400. Now we've got a Labour government which has a clear mandate and a clear set of policies. We're trading 250 points lower. That's not great.
Well, I think it speaks to the fact that we've seen a pause in some of the foreign buying. In the first half of the year, we had a lot of M&A and that sort of action in the market. That's paused a little bit. I think as investors, foreign investors, see the earnings come through, which we've started to see in the market, and the continued buybacks within the market as well, marry that with the fact that it's trading on 12 times earnings, return on equity for a lot of the companies is growing in double digits. That's a powerful
Rory, I can't help thinking it's basically holders selling because they were terrified about capital gains tax increases, which have actually since happened as well, because they're concerned that the wage bill for domestic UK companies has just gone up moderately aggressively, certainly for SMEs as well, which again puts the skids under the 250. Yes, a pause on foreign buying, but it's actually domestic holders who have been selling, isn't it? There's
been some of that for sure, and the CGT aspect you mentioned. But I think the CGT change was not as bad as feared, so that perhaps puts the brakes on that. We've also seen companies report this week, so we have Next, we have Sainsbury's, talk about the ability to pass on increased prices. So I think companies with pricing power in the UK will be able to shift some of that increased expense on.
Let me talk about different style of rotation. You were talking about obviously cyclical from technology, but what is very clear, as you mentioned, with the UK on 12 times earnings and Europe trading similar-ish kind of levels in many cases as well, that people have just said this is gangbusters, the US election for the US stock market. Whether they're right or wrong over the medium term, we'll find out. But actually, it's leaving Europe behind yet again. Is there an opportunity in Europe now? I mean, you've mentioned an opportunity in the FTSE. I'm yet to see that come through with, again, another underwhelming performance. But should we be looking at European equities now?
Our view is the opportunities is in the UK and the US. Okay. We're less positive on Europe. And I suppose if we look at the US, the companies that have done well, particularly post the election result, have been those companies or those sectors that have beaten very modest earnings expectations, that were trading on cheaper valuations than some of the ones that have propped the market up for the last couple of years. And that's starting to come through and broaden out.